Is Meta Platforms, FB stock, a buy after 3x return in the last 5 years? Please like our video and subscribe to our channel, comment and share with your friends. Facebook's parent company, Meta Platforms, FB, looks to have fully recovered from the Cambridge Analytica controversy. The stock price has made up for lost time, but I believe there is still a lot more upside to come. While I am skeptical of the metaverse's direct profit potential, I believe that investments in the metaverse will only serve to enhance the underlying secular growth story. As multiple expansion plays out, I rank shares as a solid buy over the long run. Facebook stock price. After years of treading water, FB has finally broken free from the plague thanks to jet fuel. The average price target is just over $400, implying a 20% increase in value. This, in my opinion, demonstrates the strong secular tailwinds that are boosting Facebook's financials. Every new generation is increasingly open to utilizing cell phones and social media, which explains the ever-increasing user base. When you consider the shift toward online advertising, it's simple to see how Facebook has become a crowded moniker. Facebook has also increased its average revenue per user, ARPU. It's possible that the significant sequential decrease in operating margins was the only flaw in the quarter. I should point out that revenues were rather consistent over time, implying that the margin compression was due to higher expenses. The 8% sequential increase in personnel numbers accounted for a large portion of the increase. While I understand the elevated expense profile's near-term headwinds, investors should keep in mind that Facebook has traditionally been a good capital allocator, so investors should expect the increased investment to pay off in the future. There's reason to believe that investment will continue to rise in the future. Facebook stated plans to invest $10 billion per year in its metaverse vision. It's unclear what this means, but for the time being, investors may expect margins to be squeezed for several years. What is FB stock's outlook for 2022? Earnings are expected to climb at a double-digit rate, according to Wall Street experts. Those figures, however, are likely overstated since they do not account for operating leverage. Over the next decade, I estimate Facebook's earnings to compound at a 15% annual pace, though much of that growth will come in the second half as its metaverse investment bears fruit. Is FB stock a buy, sell, or hold? Some may see Facebook as a metaverse investment. For the time being, I'm not sure how much the metaverse will help Facebook. Here's an example of a back-of-the-envelope calculation. Virtual shoes, for example, are likely to be the most popular purchases in the metaverse. Last year, global retail spending was estimated to be around $13 trillion. I presume Facebook takes a 20% cut of all transactions within its metaverse, which is comparable to, if not lower than, usual App Store costs. In-game purchases, I imagine, cost 1% of what they would cost in the real world. Using these assumptions, Facebook may generate $26 billion in revenue, which is around 20% of the 2022 forecasts. But my major point is that buying Facebook now looks to be justified solely on the basis of its current business areas. Any further earnings from the metaverse are merely a bonus. FB, in my opinion, now offers the finest risk-reward potential in the market. Despite having $58 million in cash on its balance sheet and strong secular growth tailwinds, Facebook is only trading at 23 times forecast profits. Over the next 2 years, I predict FB re-rating to a price-to-earnings growth ratio, PEG, of at least 2x, suggesting a 100% upside. The multiples witnessed at Adobe, ADBE, and Apple, AAPL, both of which have PEG ratios in excess of 2x, support that projection. The main threats, in my opinion, are government control and the incapacity to compete with other social media platforms such as Snapchat, SNAP. Thanks for watching the video. Please like the video and subscribe the video.